Hello, welcome to Cryptonomy. Today we're going to be discussing the possible resistance that Bitcoin can have as it approaches its previous cycle's all-time high, right? Um, it also corresponds to the level at which the 200-week EMA sits right now. So it is no surprise that the 100 and the 200-week SMAs are pretty important right now, and a lot of people are looking towards them to determine where Bitcoin could go. Because historically, Bitcoin always, after breaking the 100-week MA, it always goes to its 200-week SMA, right? When it breaks the 100-week SMA, it goes to the 200-week SMA. We've seen that repeatedly over and over again. So if we take those out, be more clear, and over again. It's all previous cycles. That's what have been happening, right? And we see the same thing play out this cycle. So far, we have broken down the 100-week EMA as we have been discussing this level all the way from here. All the way from here, when we saw that wick, we've discussed that this is possible resistance and we may be in some consolidation period before we continue the trend of the bear market, right? And we also did a whole level of where we think the bottom is based on statistical approach. Maybe I'll do a refresher and post it soon as well, right? Because some things maybe need to be revised, but the whole thesis that we outlined a few months ago seems to be playing out so far. So that's good. We're going to keep this approach probabilistic and statistical as always, and I hope you can learn something from it. Before we continue, I'm Mo. I'm a computer and data scientist, and I've been a crypto investor for the past 7 years. I've actually paid my tuition fee the first 3-4 years. I was unprofitable, but then I was able to turn profits, the past 3 years. So I was able to turn a humble portfolio into 6 figures, this cycle especially, and I started this channel to try and teach people the tips and tricks that worked out for me and the good trading strategies and the way of thinking that makes money, and the stuff that I did that actually cost me my tuition fees, right? So yeah, the first thing that is important for any speculator, especially if you read like the Market Wizards, I would suggest, or Reminiscence of Stock Operator. Those are the books that change your whole trading career. So once you read books, you'll start to understand what is actually good trading and what is not. Put them on repeat. Put them on repeat. All right. You can even go to the Market Wizards and it's interviews with the best traders that have ever lived. Right. There's a whole series: unknown market wizards, hedge fund market wizards, new market wizards, and the original one. And you hear them say the same things, and that's how you know what good trading is. For example, the first thing is everybody trades differently. I don't know how we divert it here, but I think it's important to discuss, because trading is not only knowing the direction, but after knowing the right direction, you should be able to put the right trade. People can be right about the direction and still lose money, right? People can always be right about direction and they can still lose money, and that's the most painful thing that happened. And that happened to me recently until I remember that quote. So I was putting trades here and I kept getting stopped out, tick 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 tick, and I was right about direction, but I was wrong about the timing. So but I made sure my losses are limited and I survived. But at the end I focused, I stopped trading here, and when I saw the signs I finally entered again here, and that was nice. Speaking of shorting, right? And this video is not going to be heavily like focused on shorting, because I know a lot of people don't like to go short because it's more risky. But of course, we're going to be discussing where Bitcoin could bottom out this bear market cycle, and what should we accumulate more Bitcoin, of course, for the viewer, or should you maybe wait? That's what the video is going to help you with, or short if you want, right? Like if you're experiencing that, but most people that probably watch this video will not be going to be shorting, right? That should happen after you make money on the upside. I would suggest maybe trying to make money on the downside, because it's a little bit more complicated and probabilities are against you. So if you go look at Bitcoin, right, it just goes up and to the right. So on the long term, probabilistically, going long is easier than going short, because the probability is with you. But then sometimes the probability, of course, is skewed to the bears during bear markets. But overall, if you just we don't know where is the bear market here. Why it works, because, well, Bitcoin has a predictable cycle that has been going out so far, and that's very nice, right? But I do not expect the predictability of this cycle to continue. Of course, it's like the stock market. If you go look at the stock market, we will try to keep it focused again, but I think it's important to note that the stock market did have a 4-year cycle way before, right? During that period in the 60s to the 80s, right? So here there was a low in the 70s, then 74, then around 80, and then you see it starts to be broken, but 82. But nevertheless, Bitcoin has followed it all that period until here, where the bull market was shortened by 1 year, I would say. So 2 years, 62, 66, 70. You get the idea, right? It's pretty interesting, pretty interesting. The 4-year cycle does work. It gets deviated from, even the stock market now is following the 4-year cycle. If you measure it again, for example, here 22, and here 25, almost, right? And here 2026, you can say like, yeah, 24, 25, and here should be 26, right? It gets deviated, but nevertheless, the cycle does keep intact in one way or another, but there are some surprises that every trader should be, of course, aware of. That's why we don't know if we're going down or up. We just think probabilistically that going down is the most probable outcome, right? For the fact and the macro that is happening and what the chart is saying. So these are learned after continuous study, trial and error. Just make sure your tuition fee is low. So now if you're taking trades and you keep losing, make sure your losses are little bit, so you pay the tuition fee and it doesn't cost you too much, right? That's my tip for new traders. For experienced traders, refine your strategy, right? Refine your strategy. Make sure you have your methodology outlined, because every professional speculator should have that, based on the market wizards book that everybody has, their methodology that is clear and concise, and the rules as well. But sometimes those rules can be broken. So for a trader, don't break the rules unless you really need to break them. It doesn't make sense, but it makes sense. All right. Now, where we're seeing where we could find support. I think a lot of people think we're going to the 200-week SMA, and that's very reasonable, very reasonable. I think we're going there in the long term, medium to long term. We're going to reach there, and that's going to be the first major support areas. I know that's below the previous all-time high, but I think because we didn't extend too much above it, why not being able to drop below it? Now, we did drop below the previous all-time high to some degree, just like sweeped it, right? I think here is going to be more than just sweep, because in the previous cycle it was way off, right? So this was 3,400. The previous, the first cycle was 1,165, something like that. But we're, the previous cycle, it went below the all-time high, so by 2,000 or something, right? $2,000. So the trend is that we are approaching the all-time highs and we're starting to drop below it, and therefore I would not be surprised to see if Bitcoin reaches 45K, for example, which is my bear market, target, between 45 to the 60K. That's my target based on previous analysis that we did, and I'm gonna do a video refresher on that. But where I see there's going to be a short-term resistance, maybe lasting between a few weeks and a month, I'm not sure, nobody really knows, but the signs will be clearer later, something like that halfway through, right? Some kind of, loosening in momentum. The momentum is decreasing and then accelerating again, because the drop between here and here usually happens like quite aggressively, as you see, right here and there, right, and also here. It's always quite aggressive and immediate, right? It doesn't wait for anybody, and that's how this one felt most likely to many people. But for those who were actually tracking this level, which we were, it wasn't a surprise for us, and we were able to catch that if you were going short. But we also anticipated if you were trying to kind of accumulate, you maybe would have thought about the idea. Right now, I think that period of pause is quite approaching. This is the reason why. This is the main idea, the goal of this video, right? That I want you to take from. That's the previous high, right? If you take it previous high here, around, right? I think there's going to be some form of resistance because we are approaching as well at the same level the 200-week EMA. So the SMAs are important, but if we take out the SMAs, I want you to have a look at how Bitcoin has been respecting the EMAs. And if Bitcoin has been respecting the EMAs, then those should, be looked over as well. So, for example, here, I wasn't looking at the 50-week EMA to be honest back then, but after I realized I saw this, I started to understand, does an EMA give a sooner signal than the SMAs? And I think it could. It just improves the chances of our theory, right? Here, the 50-week EMA was holding support, but here it broke down. It broke down, it flipped it as resistance. So the 50-week EMA would have given us an idea that maybe the top is in, because we hadn't broken it the whole bull market cycle, but we broke it there. And that would have been a better indicator than, for example, say the 100-week EMA, which a lot of people were looking over and anticipating to confirm the bear market or not. Well, the bear market could have been confirmed for us way earlier, around 100K, rather than 87.5K, right? That's why I'm gonna start using the EMAs a little bit more than the SMAs, because that's what I like to take an advantage in the market, and any little advantage is good because you're competing with a lot of people. So trading is, on the contrary, not a PVE, not it's not infinite money. If you win money, you're taking someone else's money. So you need to make sure that you have edge over all the other traders and possibly be in communities where they can work together, right? But nevertheless, it's a PvP, and that's why we should make sure we are not only smarter, but also have clearer signals on the trends. So yeah, that's why I think this is a very nice level to see some kind of resistance. It is the level at which the previous all-time high happened. So if you check, we just bounced off from there, and where the 200-week EMA sits. And if you realize, in this zone, we have been respecting the 100 and the 50-week EMAs. So that was great support, and that was the point of inflection. Pretty interesting stuff. We're gonna continuously monitor those, but I would be cautious right here, and I would wait and check the lower time frames of the candle, that, especially on the daily, how is it gonna close. So if that closes positive, that's pretty clear that we're gonna head for quite a rally. And where is that quite rally gonna end? I think it will maybe possibly end around 82K, where the 20-day EMA sits right now. But before that, we can also check this place. If the rally is like something like that, just like a small rally, then that would be very amazing, right? Very amazing. We just do that, test the 24-hour EMA, and just continue down. That would be the ideal solution to just speed up the crash and just get the prices we want to accumulate the Bitcoin at much better prices. Or again, if you're shorting, then that is where I would place trades, right? I'll place a trade here, and I would put my stop losses a little bit above there. So I like very skewed trades. I like to know when I'm wrong. I just like to swipe off very fast. But if I'm right, I just hold for the whole downturn. So that's what I usually do. For example, here I did the same thing. I was shorting here, but putting this way. So I got swiped there. You see, I placed it very close, and I shorted here. I got swiped there, but then I start shorting, and see, it didn't get swiped anymore. Short again, and get swiped, short, not swipe, short, not swipe, short, not swipe, and that's how I accumulate my whole position. So if I'm right, I get the full sweep down, and I just put my stop losses on the right places, but limit your losses and make sure your winners run. That's the way to make money in the market. Limit your losses and make sure your winners run. And when you're in a position, don't be tempted to exit your position if you think the trend is continuously down, right? So just because you want to get a better price. If it's a bear market, remember, it's a bear market. hold your position, stay strong till factors and macros changes for you to think it's a bull market, and that's when you actually switch. At least that's for multi-month to a multi-year trades, right? And that's the trade that I like to do. I'm not a short trader. I just track each on the 4 hours sometime to get my positions, but my whole line I like to hold it for a few months to even a few years. So this whole line, I just if you're interested in my trading style, because you should probably start to learn about your trading style, and you cannot make money by copying my trading style. You just cannot. Every personality is different. You will have to test and figure out trading styles from different traders that you think are good, and then mix them for you to be your trader. And once you are the trader and you're comfortable in your trading, that's when real money can be made. Otherwise, you're going to be keep paying the tuition fee of learning. Make sure this tuition fee is not high. And yeah, just use strategies to limit your losses. Make sure your winners run, so when you win big, and when you lose small. You can sleep. That's the key. That's the key. But don't be afraid to put a big position, and don't put it in one time. So you have to, like, if you put a position here, if you start winning, you add to your position here. For example, if you're doing like so I like to give trading tips as well as the macro when I see appropriate, because of course you have to know how to trade as well as understand the macro to be a successful speculator in the market. If you're doing if you're just reading the ticker and like it's intraday, I don't think you need to concern yourself too much with the macro. So this video is completely irrelevant except the trading maybe techniques. But if you want to be a trader, you need to understand this. So it's where to position, the right time, and the right direction. What we were talking about. So yeah, if you have like for example, say $50,000 trade, what do? Each area you put, for example, you divide it on 10 or 20. Actually, depending on how aggressive you are. But I like to put maybe like if it's a 50,000. I'm not saying that's my trading position. Okay, I put 50 per trade. Okay, that's position size. Position size, right? You can change your numbers. For example, it's 5,000, then you should put probably like 100, right? Something like that, or 500. So that's where you put like 5,000 here, 5,000 there, and then if you write like 5,000, 5,000, 5,000, and then not all the way down, not all the way down. This is where people get banged, and I used to do that a lot. But now I'm changing my strategy. From Jesse Livermore himself. Okay, the greatest trader of all time. That's his strategy, and I took that from him. Okay, give credit where it's due. If you think there's kind of some resistance coming, then what I would personally do, and this is not financial advice, but what I would personally do, and I know good traders that do that, a lot of successful ones do that. For example, this area right here. Then I wouldn't add to my position just yet. I would wait for the bounce back, and I'll see how the stock does, so if it's starting to weaken, then you just add more position, right? And then it just keeps going down. That's beautiful. If, for example, you see some resistance on the 24-hour EMA or 20-day EMA, then that's a good way to put your position, right? Right now, we're looking at the 4-hour. Once we break 4-hour EMA, we can look at maybe higher EMAs or the daily. I like to look at it as well, right? So yeah, once you see some resistance here, that shows, the price cannot even break the 4-hour EMA. So, like, it's an easy choice. If you cannot break the 4-hour EMA and you're struggling there and you're like pushing and pushing, like this man is tired. If this is a man or a human or a girl just pushing something and they cannot push it past that thing, then they're probably gonna fail to reach the finish line, right? And that's the same thing of how to read the ticker, right? Do you see exhaustion? Do you see or do you see acceleration, like a big break against the 4-hour? If it's a big break, then that's strengthy. That got gas. That's going to the moon, right? And that's where you start maybe like, I'm wrong. I'm gonna cancel my position. But right here is just this candle is usually like reversal type. But on the 4 hours, how big is the reversal? It could be that, or it could be that. You see, it's unknown for now. But yeah, I wouldn't add to my position. I wouldn't do anything just yet. I would see how the price reacts on the previous all-time high and this large consolidation soon, how the price reacts here. If it just starts breaking it, then that accelerates the bear market, and let's reach where we need to go so we can buy it at good prices. But if we start seeing some resistance, then we need to start look at how intense is that consolidation period going to be. And once that's figured out, we can determine finally the next zone at which we should reach, which I think is simply, which works a lot. It's very simple, but it gives a good approximation. Of course, we determined where the second leg can be, but this is just a fast approximation because this video is long enough already. I think maybe it could be around there, 63 something, right? And that's exactly, not exactly, but close to the weekly 200 week EMA around, right? So it's possible, but by the time we get there, this should go up a little bit, and we should just find this is the zone where we should be, I think. Yeah, I think that's all for this video. If you did enjoy it, please leave a like, and I'll see you next time. Peace out.